Hey everyone, we have a very special guest and a dear friend of me today coming on the show. His name is Afshin. You guys have seen me share TradeWave seasonality charts, basically going backwards, looking at gold, looking at any of the commodities, looking at the S&P 500, equities, basically anything across the board you want to look at and understand the magnitude of the move and the detrend and see a detrended chart of all the years added together, the presidential years, whatever. I could go on, but I'll pass this to Afshin. Can you tell the audience? We'll get into some AI stuff in a second, but tell the audience a little bit about yourself and a little bit about TradeWave.
Hey guys, my name is Afshin Moshrefi. I'm the founder of TradeWave.ai. My background is really programming, but really in medicine. And the job that I had before I started TradeWave was in AI for medicine. And somehow I ended up having some extra time. I left that job, had extra time, and built TradeWave for fun, actually waiting for funding for a startup, which never came true. And I just built TradeWave really for myself. And it turned out to become a product because I had extra time. And now I'm dedicating full time, all of my time to TradeWave. So um, I've been I've been using it for the last couple of years, and although I built it, I actually had to learn how to use this information, and that took a little while.
Mhm.
But now it's really clear how it's useful and how unique it is. You get information with TradeWave that you just cannot see or find anywhere else.
And that's why you built it in the first place. And when Afshin came to me, showed me what he had, I was like, wow, this is different. And a lot of us have seen seasonality charts over the years. And they're the one thing I always say about most seasonality stuff is it just wasn't very tradable. How exactly do you trade something like for example, an analyst can come out here today and say, yes, by the end of the year, the S&P 500 will be higher, and they can be right very easily. But how do you trade it? Is it higher because Q1's very strong? Is it higher because certain periods very strong? What if you need to get out at certain points? How do you get back in? These are questions that TradeWave actually answered using seasonal tools. So it's a very interesting product, and there's a lot of good free stuff on there at the moment. So if you guys go to the website, TradeWave.ai, and just kind of check it out and play with some of the tools, you can kind of look at some things, get a good understanding for what it is, and bring some traffic to the site, because honestly, a lot of people just don't know about it yet. Afshin's just coming out here and finally letting people know, hey, you guys can come to the website, you guys can check it out. And it is a great tool. It's something that I use all the time as well. So hopping into what's next, Afshin, I wanted to talk to you because a lot of our people are always asking about AI and energy. So basically, we're talking about the energy cycle, and you're the guy that I want to ask these questions, because I ask random analysts these questions. They really have no idea, and they just kind of speculate on it, and they really don't know what they're talking about. You, however, we've had some great conversations off mic about this subject. So I'm just wondering, what's your thoughts on AI and energy? Let's just talk about the AI impact on the electricity supply at the moment.
Yeah, it's actually really interesting. I've been asked that question before. People didn't really understand what it takes to create something like a chat GPT. It is it actually is not very complex. It's if you just learn some basic AI, you understand the nuts and bolts of it. What is so unbelievable is the amount of computing it takes in order to train something like that. For example, ChatGPT first version, when it came out, it took 10,000 GPUs. Those are 10,000 graphic cards inside of servers plus 22,000 cores of servers, which are also around 10 or 15,000 servers to run together at the same time for over 3 months before they were able to train something like ChatGPT that we saw. And they have done this over and over. And it cost, they didn't even buy it. This is the rental cost was between $5 to $10 million for first version of ChatGPT. Now it is staggeringly more. So just imagine what happens if anybody who's created an AI model needs to use 10,000 more servers. And that's why the demand is going to go up so much that at least 10% of the United States electrical use will be for training AI by 2030. It's staggering. Well, our
That's
electric prices are going
that's
to go up.
massive. That's massive.
It's crazy. I mean, it's crazy. I don't think electric cars use that much power out of all of the millions of them that are on the road compared to how incredibly many servers, more servers have to run with GPUs in order to train model after model. I don't know if you guys actually pay attention to it. Now there are like thousands of other models besides ChatGPT are available. Every one of these have used unbelievable amount of computing power, which is all electricity dependent. It's crazy usage.
So I guess the next question is, what exactly, in the United States we use a lot of different energy. We still use a lot of coal energy. We use natural gas. This is going to impact these things heavily. The other question that comes up a lot is, do you think this is something that's going to stay that way, or do you think AI at some point will help us to not use as much energy going forward into the future? Like, let's say let's look at a short-term time frame. I completely agree with you. The long-term time frame, it's not my expertise. So I'm wondering, what do you think about the long-term time frame? Do you think there's a way AI ever gets to a point where it uses less energy? This is an argument that's been told to me a bunch of times. AI will use less energy at some point because it will solve certain problems. I don't see that, but I'm wondering your thoughts on it.
No, there is something called the smart grid. The smart grid, which is being deployed more and more right now, will allow routing of electricity because a substantial amount of electricity gets lost during transmission from where it's produced to the place that it's used. It's a huge amount of loss. What AI or smart grids, which use AI, will do is route them intelligently in order to reduce the loss. So that's what people are talking about. But compared to the unbelievable increase in demand, oh, we're going to need more electricity. So right now, one of the studies that I read about was that by 2030, the average electric producer in US is going to have to produce 25% more electricity just because of demand. That's huge, huge. I mean, I don't see how that's even possible with renewables. I think nuclear is going to have to get the slack.
Yes.
There's just such a demand. And by the way, France just opened up another huge nuclear facility.
Yes.
Their usage are going up. They are they are like the San Francisco of Europe right now.
No, but that's interesting because it brings me to, where I find I really cut my teeth in trading is the basically looking at the material sector, looking at the mining sector, and really understanding the energy usage between all of these things and understanding nuclear. That's the way we would have to go to make any of this sustainable. Like, it doesn't make sense otherwise. And I think at the moment, like you're saying, without the amount of nuclear facilities in the United States to really pick up all the slack, we're going to probably see a increase in initially an increase in natural gas prices, coal prices, energy prices, probably just across the board at the moment. So, moving forward, it's going to be interesting, and I'm glad you came on because this is a conversation that's come up again and again and again, and we're always debating it. But you actually having the background that you do and understanding it better than basically anybody I've ever had on here is really helpful. Once again, and if you guys want to write in or ask questions to Afshin about AI or anything, feel free to. But I have a bunch of college students who watch the shows a lot. And you mentioned a couple things, and I thought this was kind of interesting because you mentioned, what was it? You had a way of making AI look more human by making it have certain errors in its writing. So what exactly did you? I forget exactly what you said there, but I was like, man, the college students watching would love to hear that.
Oh, I don't know if I should say this.
You should. It's a good one, and it's not, it won't hurt them because they're already using it anyways, of
That's
course,
true.
which they should be.
There are AI detectors out there, and AI detectors really detect text that's been generated by AI by trying to assess how many mistakes there are. And if somebody speaks perfect English, perfect grammar, and doesn't make a mistake, can actually be detected as that text could be detected as AI generated. I actually had this from a relative of mine who has a husband who's a writer, and his writing was detected as AI, and he doesn't even know anything about AI. He's just a really good writer. So, given that, what I've done before is generate AI text, and I've told ChatGPT to rewrite this text and have 0.1% of the information mistake, add 0.1% of grammatical mistake in there, but make it undetectable to general users or general readers. And it does it. And then the AI detection just falls through. It just doesn't think it's AI anymore.
It's so interesting because, like, so Afshin and I, we talk a lot, and we're having these conversations, and literally it's like a master class in like AI every single time we talk. Because when we first started talking, he said you're going to start hearing the term AI agents at some point coming up soon. At that moment, you couldn't Google it and really find anything online besides some speculative articles. And now it's like a very normal thing that people are now talking about. So Afshin's always kind of ahead of the curve on this. That's why I'm like, it'd be fun to have him on here. And I mentioned it earlier. I'm like, just asking some general questions, some general tips and tricks because he knows them all. He's very good. I've watched him get people jobs by telling them how to talk to or interview through ChatGPT. I mean, and then you've also had the story with the doctor. Let's talk about the doctor story and a place where people on the internet can actually search better using an AI tool. So let's talk about that story, and then we'll hop into a little bit more about TradeWave.
Yeah. Oh, I think you mean when I went to a doctor and didn't believe that I had a back problem, right?
Yes, and
That one?
you well, there's that one, and then you had him go to Perplexity. Some of
Yes,
these,
I
yeah.
did.
Okay, that's the same one. Okay, cool. Yeah, you don't
Yeah,
have to go through the exact issues if you don't want to, but you can go through just talking about the doctor using it, because that's what I find is very interesting.
yeah. I had a back problem that I went to many doctors, and they took X-rays, and they all told me that this problem, you don't have it. I've even was told by somebody I should see a psychiatrist, but I have pain. So, and I went finally to another doctor who said, it's impossible. This is not it. You have other problems. Anyways, I this was a pain doctor. He treated me and reduced the pain. But eventually I went to a website called perplexity.ai. This is not just like ChatGPT. This website actually does research. ChatGPT just brings you back information it's been trained on. This one actually does research. So I found this research on Perplexity, and next time I went to this doctor, I showed it to him, and he actually wrote it down. Next time I went over there, and a nurse came out, and the doctor said, "This is the guy that showed Perplexity to me." And the nurse said, "Oh my God, he is obsessed with Perplexity. He at least tells 3-4 times a day to all of us to go to Perplexity and search on it." So apparently he uses it a lot now, because you can actually find this information that he told me is impossible. It was right in there when
And
you
that's
Perplexity.
yeah. And also Afshin told me to go there for a couple things. I had trouble finding quotes from old books, and I could find anything on there. It was pretty interesting. But that's the other thing. So getting into TradeWave, and which is also started from the same idea that Afshin doesn't like to be told things are impossible. Once somebody tells him things are impossible, he goes, okay, well, I better figure this out. And TradeWave was kind of born from that same kind of idea. So what exactly is TradeWave and how should we use it? And so we can bring up some of your tools. I'll go back to share your screen, and then I'll bring that up in a second, and we can kind of go through some fun stuff, because man, this is a really cool product. So go down to present. I think we lost it earlier when we were changing stuff around.
Okay.
But yeah, TradeWave basically, like we talked about it, to this year and in presidential cycles, and I found this kind of interesting, which is, the last 20 presidential cycles or 10 presidential cycles for post-election years. There's a lot of green there, but if you go before that, there's not quite as much. And Afshin had some kind of ideas basically going forward on what's going to happen this year, volatility in the market. So what are we looking at here, Afshin?
Let me actually start with S&P 500 index.
Okay.
I've actually already saved it, so I'm going to pull it up here. So actually, let me just explain what TradeWave is. I had this idea 25 years ago that markets going through cycles. What does that mean? I mean, at the time I was just looking at stocks. That means there's certain dates every year after year. For example, Dell Computer would go up during the time that people gift or buy Dell computers for whatever reason it is. And that dates seem to repeat with high probability. And I wanted to actually visualize this information somehow. And that's how this entire concept came. So markets go through cycles, and TradeWave find those cycles and then displays it to you as a pattern that you can study and see how this pattern has behaved in the past. Basically, it's history lessons. There's no prediction here. It's all telling you how the history has performed in the past. That's all it is. So, for example, I can go to S&P 500, take a look at last 97 years, click on buy and hold, and you can actually see how S&P 500 has done every single one of the years from January 1st until the following January 1st. Buy and hold means you're never out of the market, and TradeWave simulates it by looking at the dates from January 1st to the following January 1st. So, for example, this year, we're up 1.26% from the first trading day of 2025. And it shows you each of them. But one other thing it does, You can also filter this by presidential election cycle. So you can look at it on presidential election years. How did S&P 500 perform? So as you can see, it starts from 1928, and the following year is 4 years later, and so on. And you can see how during presidential election years, see, last year was 23%. Last presidential election year was 2020. It went up 13.59%, and so on. It dropped in 2008, 35% for that. But you can also go to presidential election plus one, which is this year. So the last five, actually, if you look at the last 10 presidential election years, have all been positive if you for S&P 500 except 2001. 2001, S&P 500 dropped 10% from beginning to the end of the year. But in 2021, it did great, 29%. In 2017, 19%, and so on. So right now we can predict, or at least not predict, but we can see since 1985, S&P 500 has been positive for the year after presidential election, except for 2001. Well, we know 2001 was, a unique outlier because of year 2000, and also that's when the World Trade Center attacks happened, airlines stopped flying. So it shows that now there's a good chance if things stay the same, like the last 40 years, for this year to be positive. But then look at this. Throughout 1969 to 1981, four on presidential election plus 1 years, S&P was negative. Those are during the rising interest rate, high inflation times. Now we are going into a high inflation time, so maybe we are going to a similar time frame like this.
Mm-hmm.
That's another possibility. So we could go to this 1960s and 70s style drop of the, high inflation. So I don't have a lot of good predictions for this, but last year, let me go to presidential election plus two. Presidential election plus two was negative, but look at it. It's actually a very negative part of the presidential election cycle, which is 50%, only 50% profitable. But look at this. When you go to presidential election plus three, or the year before a presidential election, it's really positive. 2015 was a flat down, but all these other years, it was positive. Last time it dropped sharply was 1931. So I had a video that predicted that this was going to be a positive year, but this is the reason for it. But this year, I consider it very volatile. And why is that? Let's take a look at our trend chart, which you see below here. Trend chart is taking every single one of the years you're looking at, detrending them and averaging them together. So the direction of the price is the actual average direction. When there is a sharp up or a sharp down, means that the probability is higher for this time frame to be down. And so I can, for example, go and select this exact area that has a down, and we should see a lot of negatives. Look at that. It's been between the beginning to around end of February,
Mhm.
markets are really negative, dropping sharply, um, 71% of the time. It's a night. Let me make it 19 days. Actually, 79% of the years on the presidential election plus one, the markets have dropped pretty sharply from the 5th of February to 23rd of February. And then look at what happens right after that. It goes straight up. So let's select that. Markets have been positive in this area, except for a few of them. We can also expand it a little higher, see what happens. Look at that. It goes from up to sharp down to sharp up, back to down. Here's another down that's between 15th of March and beginning of April. And I'm talking about overall number of years. And then it goes into an up cycle again. That's why I call this a very volatile time. And this is not always like that. If I go to presidential election plus 3, which is the year before a presidential election, look at that. It is very smooth. It's smooth up, a little bit of sideways up, not up and down like crazy like that. So it's not as volatile. You can see that there was some volatility toward the end of the summer on the year before a presidential election, which is pretty much what we did see. It happened again, and then some sideways and up. Very smooth here, but compared to the year after a presidential election, it's going to be very volatile. And the year after, 2 years after a presidential election, it's going to be more volatile. So expect volatility. But when you know this type of volatility and you can predict it, you can actually use it to your advantage.
Absolutely, because that's the biggest thing you want to do as a trader is volatility is good. Even in your portfolio, you're going to, if you want major returns, you're going to have volatile periods in your portfolio too. So understanding volatility is everything, and just the ability to get in a trade, out of a trade, especially for you guys who are very short-term traders. This tool is very, very good if you're in that time frame of a 1 month, 2 month time frame for your trades. It is phenomenal. You cannot find anything like it. So let's go through a couple other ones while we got you here. I want to talk about crude oil because I know everybody in the world is going to want to hear about crude oil right now because it's just moving like crazy. And then we'll kind of get into some other things. Gold for you gold bugs out there.
Sure.
And so let's start with crude oil. What are you seeing here?
Well, let's bring up, I already came up with a couple of them. Here's crude oil based on 21 years, I think I'm looking at. Yeah, this last 21 years. We know this outlier of 2020, but look at the rest of it. Crude oil has been positive between yesterday and beginning of April. If I click on this MFE, this light green part means how far did it actually go? What was so the dark green part is the beginning and end of the date range. So the dark green part would be, if you would have bought it at 114 and sold it on 410, your profit would have been 12.49%. If you magically knew where the high was during this date range, you would have been able to get an additional 43% in 2022. So 43 plus 12, so over 50%. That's what the light green part does. And if you actually want to take a look at one of these, let me just click any of them, and you can see the historical. So you can clearly see that 2022 was a positive profit here for CL. But if you would have known to sell it here at the peak, that would be the green plus the light green part.
And so basically a way to use it for you guys who are trend traders out there, because you're never going to hit it perfectly at the peak, but understanding that, hey, this is the probable move of this situation. And then understanding, okay, well, I'm never going to hit it at the peak, but here's where my stop loss could be because the volatility of the move. Can you show the other side of it, the drawdowns?
Yeah,
And
and here's your drawdown. Here's the maximum it went against you. And by the way, they stand for maximum favorable excursion and maximum adverse excursion.
Perfect. And so when you're looking at these, something that you can do is look at it generally over this period of time and go, where's the drawdowns? And if it goes out of that range, that's a period where you'd go, okay, maybe this is not the time to be in oil. Maybe it's going to go against me right now. And
Right.
something that Afshin sent me back in August, right after that little the yen crash, was that actually we are in range still. And if we started to move even lower in August of 2024, then we would be worried. But at that moment, there, sitting where we were within range, and August actually looking like it was a favorable period at that point, we ended up still capitalizing on that position because it ended up moving back up, and that was the bottom for a while. Actually, that's the bottom till today. So, this is a really great tool for just understanding the range and the volatility of the move and what would be out of the range. Because really, you can't get every single trade right. Seasonals, even something as good as this, you're looking at the 90% win rates or whatever. There will be certain points where you're going to have to get out of trades, and being able to see the drawdown and getting out of the trade with a small loss and is the best thing that you can do as a trader. As new traders, the people out there always think, hey, it's the upside. I'm going to catch the top. I'm going to catch the bottom. I'm going to do this all perfectly, and I'll never have to get out of a trade. Really, we're looking at probabilities, and as we understand probabilities, the better we can understand the probabilities, the more we can capture that upside and hedge our downside, and that creates really good, stable returns. That's why this product works really, really well for that.
Yeah. By the way, another interesting thing I had. So I looked at some Santa Claus trades, which actually S&P Santa Claus trade, which has been profitable 82% of the years for the last 97 years, failed this year. So it was a part of the 18%. But another one was GDX, which is a gold miner stocks.
Mm-hmm.
Gold miner stocks, I actually was in it. And although it worked last 10 years in a row, it didn't work this year. But what was interesting, I stayed in it. Why did I do that? That's pretty interesting. I think it was here. Yeah, there it is. So this pattern that worked 10 years in a row failed this year. Right there. But I knew that this keeps going up, right? Because the trend chart shows a continuous up move, I stayed in it. And as of today, I'm broken even. Although I was down substantially. I would have never stayed in. I'm very conservative when it comes to trading, but not when it says it's going to keep going up. Same thing happened to another stock. I think it was Broadcom. a pattern that worked all the time failed this year, and I was in it, but trend chart showed it's going to keep going up, and I stayed, and then it returned 30 extra percent. I couldn't believe it. It went from a loser to a smash hit by just staying in it.
And that's why it's interesting. And I always talk about this back test, which is probably the best way to understand why how trend trading works, how trades work in general, which is understanding where your stop loss or where you're getting out is everything. Because if you take a profitable system, and I just posted this on my Substack channel, if you guys want to go back and look. So I just posted my Bitcoin system, and it's a great system. It works very well. It has great positive expectancy. It even has a good win rate. Everything about it is everything you want in a system. But if I take the stop and I tighten it to 10%, if I just because Bitcoin's incredibly volatile, so if I use a 10% trailing stop on this, I will get stopped out, and that system isn't profitable anymore. So this is why sometimes you have to give things room to run. And most of the good trades I've ever seen in my entire life or have ever been in always start out a little bit negative. I wish everything I bought went straight up, but most of the time it doesn't happen that way. So you have to understand and take the volatility. And that's where TradeWave kind of comes in. And like, as you can see, okay, what's the biggest move down that you've seen here? Okay, 5%. Okay, now you can position size the right way for that type of move. Now you can have your trailing stop, depending on your time frame. If you're short term like this, your trailing stop could be anywhere from, 7, I would go over 5%, so 7%, something like that, just to hedge your downside, position size correctly, and then you're hanging on like Action is, and we have some upside. And as we all know, and things we've talked about a ton, gold miners, gold, silver, they have really good seasonality in January. So right now, it's actually looks like the gold miners have been moving year to date so far. I mean, the other day I looked, they were up 8% year to date already. So as they continue to move up, this could be a really good trade going forward. But it's all because Afshin, you just sat on your hands and did the right thing. It's hard to do, but
But I don't
that's you got
just
to
sit
do.
on my hands when I don't have information.
You have the information.
I
It's
have
it's
the
all
information.
about having the information and having the system to do it.
And you see, I just moved this from here to there, and suddenly it went positive.
Mm-hmm.
And it shows that, yeah, there it is. See?
Yep.
So as of today, I mean, I'll probably stay in it a little bit longer, but I can get out break even, actually slightly up on something that was loser by, well, I can even see it. I think it was 6%. It was a big loser, but I stayed in it for that reason.
So let's go back to crude oil for 1 second. So now that we have we kind of went through the gold miners, let's go through crude oil because I want to kind of hit on something that this chart shows that is just kind of a fallacy in seasonal trading by fundamental investors mainly, which is they always say summer, it's driving season. So oil prices, energy stocks, all these things are going to go up because it's driving season. And I always kind of laugh at that because if you've ever studied seasonals at all, like in the winter, basically December until the area that you have shaded as well, that's kind of the best time for oil and energy. And most of these things do very well around that time. And summer, it usually starts to sell off a little bit.
Yeah.
So this is something that you can't know unless you have this type of system and strategy to kind of look at and go, okay, TradeWave is basically telling me that easily. I'm not saying anything magical here. I'm just saying what the chart is saying. So it's kind of something to look at. So before we go, let's hop into lumber, just because I'm so interested that you brought lumber out of all the other things that I would love to see what you got there.
Lumber is really interesting to me because it just is housing to me.
Yes.
So here's lumber between 11th of January and 9th of February. And it amazes me that this is the time that it just skyrockets right here. And this is based on the last 30 years. This is 30-year pattern that's been 92% of the years has been positive from the first date to the last date. And if I click on MFE, you see that even on the years that it was loser, it actually went up 5.85% in 2006 before dropping for a loss. It went up 2.87% here and then lost 1.3%. And here is very sideways.
It moved up. What's interesting to me is it moved up during recessionary times. You know, like you're talking about this period is almost always bullish for lumber, which is wild. And once again, what I love about what you do, Afshin, just coming on here and showing people this is completely, nobody in the world would say, okay, lumber goes up and has its best period during this time. They would say it's cold outside. Who's building houses? Why would lumber prices go up at this time? But the data is the data, and it is telling us the truth here, meaning lumber is about to probably take a bounce, and it has bounced, and it usually does bounce. So I love this chart. I'm so glad you brought this.
Cool. I also have one other cool thing to put up. How about live cattle? It just drops in April, from the middle of April until beginning of May. It actually collapses, and 5.68% in average. This is substantial. And then it goes up. Look at it. It goes steadily up for a very long period and then collapses here. And he does it over and over. This is based on last 43 years. It's been 88% of the years it's dropped. Even these 2 years that it actually went positive, it first dropped 3.6% and 3.68%. The only year that it really didn't drop was here in 2008.
That's really interesting, and it has to do with the herds coming online and people knowing what people have right around that period of time. But it's a steady drop, and we find a lot of those, on TradeWave. Lean Hogs has one just like that. I think it bounces around that period of time and then sells off later in the year, or it sells off earlier and buys later. I can't remember, but Lean Hogs also has a very similar pattern. So your futures traders out there, there's a lot of interesting things on this.
Around here. Yeah, there it is. This is a UK one that goes up sharply, goes sideways. And in August, it collapses. And it does it over and over and over again based on I think it does it 45 years. It just doesn't miss. This is since 1980. It's failed once.
Barely.
It's barely. It was pretty flat, but it didn't go up at all in 2014. It's very strange, but look at it. It is perfect, and it's the same perfection is on the drop right there. Look at that. I mean, I don't even have the optimized numbers, the opportunities table. This is run, and for every single thing that TradeWave follows, it finds the optimized exact best patterns based on Sharpe ratio and ranks it by Sharpe ratio.
Yeah, I love it. So let's end it there. Thank you guys for joining us. Make sure to check out Afshin at tradewave.ai. He's always hosting great web videos, and you can go check out his page, check out predictions that he's done. So Afshin, I want to thank you so much for coming on, and I'll link you guys to Afshin's TradeWave account on my Twitter. All right, guys. Thanks
Thank
for
you for having
coming
me.
on. Yep, thanks for coming on, Afshin.
Bye bye.